Hello everyone, welcome to Equity Compass for the month of August. This is a series in which we would be analyzing the key trends in the market. We'll look at things from a fundamental perspective based on insights from our entire research team, where we cover 235 plus stocks and we track multiple industries. Talking about the recent developments, there has been a lot of noise around the tariffs and the weak quarterly results. So we thought we'll talk a little bit on those aspects. In terms of the key macros, India continues to do well on most parameters except growth, which has been on the weaker side in the last few quarters. However, we believe Q1 would pretty much mark the bottom of that growth trajectory, and things will look up from Q2 onwards. Early festive season will also help the growth in the subsequent quarter, which is Q2. And given the low base of earnings from last year, we believe from next quarter we should start to see double-digit earnings. In terms of downgrades, we believe we are pretty much at the end of earning downgrade cycle, and the valuations after market remaining largely range-bound over last 12 months have become more palatable. So when we look at Nifty valuations, they are only 10% above averages, and on a stock basis, we are able to spot enough bottom-up opportunities to invest for the medium term. In terms of the key ideas, I just thought I'll share some of the key ideas of HDFC Institutional Equity Research. The top ideas which we have, starting with the large caps, first would be Larsen & Toubro. We believe the company is executing quite strongly. Order book growth was excellent in the quarter gone by, and we believe that lends us a very strong visibility of growth in the subsequent quarters and even for FY27 and beyond. In addition, margins have bottomed out, we believe, and therefore the earning trajectory of the company will improve. Margins, if you would recall, was one of the pain points over last 12 to 18 months, but we should see better times ahead on that. As balance sheet continues to remain strong, capital allocation is good, and valuations are looking reasonable now for L&T. So that becomes one of our top pick in the industrial space, in the large cap space. Another idea which we are quite bullish on from institutional equities team is Apollo Hospitals. We believe the growth trajectory out there on the core hospital business is looking strong, with addition of new beds as well as scope for improvement in average revenue per bed. In addition, the recently announced demerger will unlock value in our view, and we remain quite constructive on this name in the healthcare space from the next 18 to 24 month perspective. Few other mid-cap ideas where we are quite positive, and we are happy to look beyond the near term noise and negativity in the market, because we are confident on the earnings trajectory, are as follows. One would be Amber Enterprises. The company continues to execute very strongly in terms of growth, both in the core RAC segment as well as in the electronic segment, where the company has very ambitious growth plans. In addition, even the industrial sector, they are doing quite well, and they have made some bolt-on acquisitions to further strengthen the business out there. Capacity expansion is on the anvil, and we see a very strong earning growth trajectory over next couple of years in Amber Enterprises. So that becomes one of our top picks in the EMS space. Another mid-cap idea where we are quite positive on is Shoba Developers. The company continues to grow quite well in terms of pre-sales. The recent quarter gone by, we have seen fantastic growth in pre-sales, and we expect that trend will continue in the entire financial year. 30% plus growth in pre-sales is what we are expecting, which is coming on back of launches in new cities as well as sustenance sales in the existing projects. Given a very large developable land bank, a very strong brand, a net cash balance sheet, makes us very constructive on Shoba from a medium-term perspective. Last stock I want to talk about in the mid-cap space is Indian Bank. We are quite positive on PSU banks in general. We believe that the NIMs have largely bottomed out, and they have held up the asset quality much better compared to some of the smaller private bank players in the last 6 to 12 months. Indian Bank in particular has a very strong granular franchise, retail franchise, both on the deposit side and on the loan side, not being very concentrated. In addition, their profitability ratios are among the best within the PSU banks, and valuations are looking reasonable at this juncture. Given this combination of good quality earnings and NIMs bottoming out, which will lead to better earning growth in the subsequent quarters, and reasonable valuations, we believe Indian Bank is one of the stocks within the PSU space which should be looked at. That's it from our end for this month. We'll be back next month with more analysis and insights basis, the key research being done by our institutional research team.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.